Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about First Pacific Interim Report. First Pacific Company Limited offers a diverse range of businesses and services across various sectors. The company's key areas of focus include telecommunications, fiber optic backbone, fixed-line cellular networks and digital services, consumer food products, manufacturing and distribution of branded products such as noodles, dairy, snack foods, food seasonings, nutrition and special foods, beverages, and wheat flour and pasta under the Bogasari brand natural resources. Plus agribusiness, seed breeding, oil palm cultivation, milling, cooking oils, margarine, shortening, sugar cane, rubber and other crops plus mining, gold, copper and silver deposits, exploration, mining and production infrastructure. Plus power generation, operation of gas-fired power plants plus water distribution, provision of water distribution services plus sanitation services, sewerage and sanitation services plus transportation, operation of toll roads and light rails, healthcare, provision of healthcare solutions, energy, distribution of electricity. The significant rise in First Pacific stock price, a year of growth and confidence over the past year. First Pacific Company Limited has experienced a remarkable surge in its stock price, exceeding 53%. This substantial growth can be attributed to several key factors that have contributed to investor confidence and appreciation. The company's significant earnings growth, with a 64.32% increase in diluted earnings per share, EPS, was a major driver of this upward trend. Additionally, the announcement of a dividend on September 5, 2025, coincided with First Pacific reaching a new one-year high, further solidifying investor confidence. The company's stock performance has been impressive, hitting new 52-week and one-year highs in late August and early September 2025. This upward momentum was highlighted by a Yahoo Finance article on September 9, 2025, which explored First Pacific's valuation following this recent trend. The overall stock price ranged from approximately $2.53 to $4.44, represents an increase of roughly 75.5%, confirming the significant appreciation in the company's stock value over the past year. The primary drivers of revenue growth or decline for the company can be summarized as follows. Revenue growth drivers: higher sales volumes and prices in various business segments, including Indofood, MPIC, Mainalad, PLP, Agribusiness Group, Consumer Branded Products Noodles Division, and CBP. Increased production and higher selling prices of palm products and EOF products. Expansion of refining processing capacity at Tanjung Priok Refinery. Strong leadership in fiber-powered broadband services, leading to consolidated service revenues up 4%. Growth in mobile data traffic, 5G data traffic, and demand for connectivity and integrated ICT businesses. Revenue decline drivers: lower metal output from lower gold and copper grades and recovery at FPM Power. Decrease in cost of services rendered, employees' remuneration, and depreciation of property, plant, and equipment. Increase in amortization of other intangible assets and impairment losses on accounts receivable. Accrual and accretion of non-recurring provisions and manpower reduction costs. Net income and profit margins. A mixed bag of results. The financial summary reveals a mixed bag of results for net income and profit margins across various segments. On the one hand, some companies experienced significant increases in net income, such as Indofood's 7.4% EBIT margin and PLDT's 0.5% EBIT margin. Additionally, consolidated core net income margin rose by 1%. On the other hand, some companies saw a decline in profit margins. For instance, gross profit margin decreased to 33.1% from 34.6%, while EBIT margin dropped to 19.5% from 20.5%. The Agribusiness Group's EBIT margin improved to 17.6% from 13.4%, but the Distribution Group's EBIT margin remained steady at 8.9%. The changes in net income and profit margins can be attributed to various factors, including substantial lower net loss on foreign exchange difference from financing activities and higher core profit. However, higher raw material costs for CBP and decline in wheat byproducts prices for Bogasari also contributed to the mixed results. Overall, while some companies experienced significant improvements in net income and profit margins, others saw a decline. The reasons behind these changes are complex and multifaceted, reflecting the dynamic nature of business operations. The company is indeed generating positive operating cash flow, as evident from the financial summary. The net cash inflow from operating activities has increased from $103.7 million in 2024 to $92.3 million in 2025, indicating a steady growth trend. Furthermore, the direct calculation of operating cash flow on page 49 shows a substantial amount of $314.1 million in 2025. This confirms that the company is successfully generating positive operating cash flow, which is a crucial indicator of its financial health and stability. The company's financial performance was mixed across various segments and regions. The noodles, snack foods, and food seasonings divisions showed a 2% sales growth each, indicating stability in these areas. On the other hand, Bogasari experienced a decline of 2% in sales. The beverages division recorded significant sales of 37.5 trillion rupiah, but lacked specific growth rate information. The dairy division's performance was unclear due to higher raw material costs, affecting CBP's EBIT margin. Management's outlook, focusing on sustainable growth and efficiency in DaFood, is committed to delivering value to shareholders through dividend returns and share price appreciation. The company aims to drive organic growth in domestic and overseas markets while improving operational efficiency. A key strategy is leveraging its competitive edge to deepen market penetration, resulting in sustainable growth. In addition, DaFood will continue investing in network upgrades and expansion of 5G services, prioritizing debt management by reducing the net debt to EBITDA ratio. The company also commits to a dividend policy with a payout of 60% of telco core net income. Overall, DaFood's strategy focuses on sustainable growth, operational efficiency, and long-term value creation through investments in key sectors such as energy, food security, and inclusive infrastructure. The company has made several strategic moves through acquisitions and divestitures. In terms of acquisitions, the company purchased approximately 9.5 million shares of DaFood Agri Resources Limited for $3 million. Additionally, it acquired an equity stake in Companhia Mineira de Açúcar e Álcool Participações, CMAA, through IndoAgri. On the other hand, the company has also divested certain assets. Notably, it sold its 34.9% interest in MPLRC to Sumitomo on May 28, 2020. These transactions demonstrate the company's efforts to expand and restructure its business operations. Based on the financial summary, it appears that the company has a history of paying dividends in various periods and amounts. There are multiple mentions of dividend payments across different pages, indicating a consistent practice of distributing profits to shareholders. However, when it comes to share buybacks, the information is less clear-cut. While there are some mentions of acquiring shares or repurchasing them from other companies, these instances do not necessarily constitute traditional share buybacks. The only clear mention of share buybacks is on page 42, where it refers to the purchase of shares under a share award scheme. In summary, the company has paid dividends in various periods and amounts, but there is limited information on traditional share buybacks. Concerns about inventory buildup and supply chain disruption. The financial summary highlights potential issues with inventory buildup and supply chain disruption. On page 10, higher raw material costs and lower operating profit at the CBP Group indicate a possible strain on the company's supply chain. Additionally, higher selling and distribution expenses suggest that the company may be struggling to manage its inventory levels. However, other sections of the summary contradict these concerns. The construction of a new noodles factory and addition of 2 Ultramax vessels, page 11, are expected to improve supply chain efficiency and support growing market demand. Furthermore, several pages, 22, 25, 32, 42, and 53, mention no concerns about inventory buildup or supply chain disruption. The cost of sales decreased from $3,207.9 million in 2024 to $3,191.6 million in 2025, page 39, indicating a potential decrease in inventory levels or improvement in supply chain efficiency. Overall, the summary presents mixed signals regarding concerns about inventory buildup and supply chain disruption. That concludes the financial summary for First Pacific. Feel free to comment below, and I will be happy to answer them when possible.